Hello and hi again everyone. I hope you're all doing fine. Today we're going to continue our lecture on Chapter 9, Accounting for Non-Current Asset. For today's learning objectives, firstly, we're going to look at disposal of fixed assets. Second, we're going to look at how to do the presentation of fixed assets in the statement of financial position. There are three ways to dispose of a fixed asset. 1. We may discard or throw the fixed asset. 2. We may sell the fixed asset. And 3. We may exchange or trade in the fixed asset. Now, let us look at the steps to record the disposal of a fixed asset. Step 1, we will bring the depreciation up to date. This means that we will record the depreciation of the asset to be disposed of only until the disposal date. We have already learned this journal entry in last week's video. Step 2 is to remove the asset and its accumulated depreciation from the book. Step 3, record the new asset received. This step will be used when we exchange a fixed asset. Step 4, record the cash received, or paid, in the disposal of the asset. And Step 5, record the amount of gain or loss. This week, I will focus more on Step 2 to Step 5. Let's look at how to record the journal entry using the steps mentioned before, for the three ways explained earlier. If we discard the fixed asset at the end of its useful life, after we have recorded the depreciation expense, we will then remove the asset and its accumulated depreciation from the book. This is done by crediting the assets account, and debiting its accumulated depreciation account. Since the asset is discarded, therefore no money is received. We won't get any loss too, because the asset has reached its end of useful life. As for explanation, write, to record disposal of asset. Next, if we sell a fixed asset before the end of its useful life, we will do the same steps as in discard. Remove the asset and its accumulated depreciation from the book. So, credit the assets account, and debit the accumulated depreciation account. Then, record the value of any cash received in the disposal of the asset. We will debit cash or bank for this. And lastly, record the amount of gain or loss. Debit the loss on disposal account, or credit the gain on disposal account. Note that, we can only incur a gain or a loss but not both. As for explanation, write, to record the disposal of asset at a gain or loss. How to determine whether we get a gain or a loss from disposal. Gain or a loss is calculated using the formula, cash received minus book value. Book value is the cost minus the accumulated depreciation. When the book value is greater than the cash received, we will get a loss. But, when the book value is lesser than the cash received, we will get gain. Lastly, if we exchange a fixed asset for another fixed asset, we will first remove the asset and its accumulated depreciation from the book. Credit the assets, old, account, and debit its accumulated depreciation account. Next, record the new asset received. Debit asset, new. Then, record the value of any cash paid. Credit cash or bank for this. And lastly, record the amount of gain or loss. Debit the loss on disposal account, or credit the gain on disposal account. As for the explanation, write, to record the disposal of asset at a gain or loss. In exchange for another fixed asset, a gain or loss from disposal is calculated differently using the formula, trade-in value minus book value. This formula can be expanded as new assets cost minus cash paid and then minus with the old assets cost minus accumulated depreciation. When the book value is greater than the trade-in value, we will get a loss. But, when the book value is lesser than the trade-in value, we will get gain. Now let's look at our last learning objectives for this topic, presentation of fixed asset in the statement of financial position. In the statement of financial position, fixed assets are reported at book value, after deduction of the accumulated depreciation. For example, when we list the non-current assets, we will write the fixed assets first, followed by its accumulated depreciation. Furniture will deduct its accumulated depreciation. Machine will deduct its own accumulated depreciation. These accumulated depreciation account cannot be combined because they are for different assets. But, in the case of land, there is no accumulated depreciation because land account is not depreciated.